is with us, Chief Investment Officer, Bay Street Capital Holdings. Thanks so much for being with us. So I want to hear what you think about the markets, as it's been a little more favored towards growth rather than value lately. What are your thoughts?
Thanks. I think, leading indicators are showing that inflation is slowing down. We saw this morning that interest rates for housing is also down from the previous month. And the Fed is also being, we'll say, data dependent as opposed to on autopilot. They're also going to adjust their rates. We're kind of expecting a 50 basis points hike down from the 75 basis point. So I think that's where the market is right now.
Yeah, absolutely. And all of this, the action ahead of the big jobs report tomorrow. What are you going to be watching within that jobs report? I mean, obviously the Fed watches it closely too.
So the job market is still strong and is coming back into balance. And I think that's what the Fed wants to see. Alongside the unemployment rate, we're going to be looking at the consumer credit numbers, and not just consumer credit, but also corporate debt is also, it's on trend relative to our GDP. And that's why I think a lot of what we're seeing today, people are saying the markets are taking a breather, things are priced in. That's the reason why. And that's why we're also saying that the markets are showing that inflation's coming down and things are leveling out.
Yeah. So when it comes to the portfolio, I mean, there are some concerns about slowdowns and recession, but of late, growth has done a little better. Now what? What do you tell investors how they should allocate those portfolios?
Yeah, I think everyone's still, harping on a balanced portfolio. Dividend stocks are back in style. For people that have a cash position, I would say don't discount your cash, don't discount the importance of your cash position, and continue to dollar cost average into the market. No one's going to be able to time the top or the bottom, but the way things look are, I would say, positive. The narrative around a major recession is also coming down. The probability of such is also coming down. We've seen the GDP slide for the last two cycles, but again, the market overall is strong, and I think people are excited. The markets are excited about what we're seeing moving forward as we wait for these numbers to continue to come out.
Yeah, let's get to some of the names you like. You like Warren Buffett's Berkshire Hathaway, obviously a hand in so many different companies, and he actually did well during a time where others got really crushed. BRK.B, what do you think?
I really like them. We allocate a decent position to them because they have a subject matter expertise during a time like right now. They've been buying back a lot of their own shares. They've been taking large chunks of other, again, dividend paying companies that have come down in this systematic shock. I also really like Ford. We took a position in them last month. Compared to their peer group, the financials look really good. They slipped about 30-something% for the year to date. But the numbers, again, if you're looking at these from a fundamental standpoint, they're actually very attractive at the current price points.
Right. Okay. So it was BRK.B. Did you mention something else that I missed? You said I also.
I said Ford. Yeah, I mentioned Ford. I mentioned Berkshire, their buyback. They bought a big position in Citi and Ford. We really like Ford.
Yeah, yeah. And then there's ATKR, which is a completely different area. They electrical products is what they manufacture. Yeah. Tell me a little bit about this name.
So we've had a position in the core really for about 2.5 years, like right before COVID. We saw this as a company that was going to be able to outperform because of the space that they were in. They provide the components that go into a lot of the utility space. Again, in a rising interest rate environment, utilities is one of the sectors that is going to outperform. And again, compared to their peer group, when you're looking at a name compared to another name, Accord just had really strong financials. And although it's been coming down year to date, I think that's a big reason for that is because they're still seeing outsized margins, because once COVID happened, their net margins popped up. And we're going to wait and see how long it's going to take for those to normalize. The current price that you see today, I think, is a function of analysts saying, hey, once COVID numbers come back to normal from a margin standpoint, that's about where it should be trading today.
Okay. And last but not least, you're looking at a name, Fairfax India Holdings, which has exposure to financials. I mean, financials have been coming back a little bit here at home. Tell me about FFXDF.
So I will say, relatively unknown names. Prem Watsa out of Canada owns Fairfax Insurance, which is very similar to Berkshire. So if you're familiar with Berkshire, you could say Fairfax is the Canadian equivalent. Fairfax India is like a publicly traded private equity type position. They own a lot of the infrastructure type names that are in India. They own a position in the Bangalore airport, for example. And again, from a where it's currently being priced in the market, we just believe it's underpriced. We've been holding that position since around the $7 price point. We think it's actually supposed to be trading around a $30 price point. And again, as India and just in terms of the emerging market space continues to gain exposure and people become more aware of what's available, that stock is still, significantly underpriced. Proven by the Dutch tender that they did a couple of months ago, they were actually offering to pay $15 per share for their own stock. So,
right now it's at $10.95. Good to see you. Thank you, William. I'm glad you were able to join us on the show. I think this is our first appearance together, so it was nice to meet you, and welcome to the show. Thank you. William Huston, Chief Investment Officer, Bay Street Capital Holdings.